This small cap stock is up 150% over the past year. Aspen Aerogels, ticker symbol ASPN, has developed a thin aerogel barrier that can be used in battery packs for electric vehicles. The material prevents thermal runaway and stops batteries from catching on fire. At the current price, Aspen has a market cap of $1.44 billion and the enterprise value is roughly the same. Fundamentally, this company doesn't look like much. It's valued at over 5 times revenue despite sharp losses and negative free cash flow. Even adjusted metrics are incredibly slim. However, investing is about the future, not the past, and Aspen Aerogels is starting to look interesting. The company is winning new contracts with automakers like Porsche, and last quarter management significantly increased its outlook. Revenue guidance was increased 9% to over $380 million, and adjusted EBITDA guidance almost doubled to over $55 million. Looking further out, the company thinks it can get to over $650 million in sales, and when you take that guidance into consideration, the stock starts to look cheap. Based on 35% margins, the valuation would drop to under 10 times EBITDA. However, as with any emerging company, there are some clear risks. The first is that Aspen's PyroThin product doesn't serve cylindrical batteries, which means it's not a good fit for companies like Tesla and Rivian. Aspen's stock struggled last year after reports that General Motors was considering a switch to cylindrical. That would have been a big blow for Aspen because GM accounts for roughly 40% of revenue. Another issue is competition from China. One analyst noted in 2021 that Chinese producers have grown market share in aerosols from essentially zero to roughly half of the market in just a few years. Aspen sued some of those manufacturers for patent violations, but lawsuits only go so far, and it's hard to see Aspen's gross margins of 30% improving significantly in such a competitive market. So Aspen Aerogels' opportunity may not be as big as some investors believe. Growth in electric vehicles looks to be limited to non-cylindrical batteries, and sales could be pressured by low-cost Chinese entrants. It's a story we've seen play out for numerous manufacturers over the years, and it's always hard to predict what will happen. That's not to say an investment in Aspen can't work, but the company will likely require some help to get there. Government funding to build out new plants, regulations to limit competition from China, and Aspen needs to hope that not many of its customers decide to move to cylindrical batteries. Electric vehicle growth should help Aspen, but with so many moving parts and negative free cash flow, I think you need more of a margin of safety to invest in this stock. But these are my personal opinions, not financial advice, and I hold no position in Aspen Aerogels. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.